Good morning, traders. Paul here with GammaEdge. Today is the 22nd of July, Friday. Let's get started. The fine print. Please read it. Pause your player. If you agree to everything here, hit the play button. Important to you, it's important to us. The market model continues to show everything that we need to be a bull. We are certainly nearing the end of what we call the ribbon inversion. We had a signal that was confirmational a couple days ago, and you can see what we call railroad track pattern up, both in the longer term and the shorter term is looking really good. We are extended. Watch for a pullback. If we do pull back in the cumulative tick, and this is the ARCX, we do want to remain above this level. So that'll give us some staying power if you are currently long, but certainly take a look at cashing in on some of your long positions if they're profitable. But right now the trend is up. Had some questions about persistence of the trend, so ran some tests, and here's the distribution of when this signal fires, how long does it last? So how long does the long ribbon inversion signal persist? So you can see the counts here on the y-axis, the number of occurrences and consecutive days. And typically we're running 2 to 6 is the dominant, so we've had 9 instances in the last 10 years or so of it being within that 2 to 6 day time frame, and this is day 1 here, day 2, and day 3. So we concluded day 3 yesterday, so we're walking in this area right now. You can see from the 7 to 11, we've had 7 occurrences, and from 12 to 16, 4, and 16 to 21. You see how this works. This is a very good historic plot that gives us a really good confidence of catching the trend when the trend persists. This is not forecasting that the trend will persist. This is basically saying how good is the signal at catching the trend, and it's actually very good. So just pay attention that the signal tends to turn off in this up to about 31 days. So these are trading days. So here's about a month. So 6 weeks or so. So if we're going to catch a trend, we're in it. We're in it good. So if you have any questions, come into the Discord, ask. A lot of folks are familiar with this, are using it. It has changed their trading. It changes which side of the market they look at, and would urge everyone to come in and learn this. Index condition, bullish across the board. We're seeing a continued decrease in net negative gamma, continued increase in net positive gamma. This is good on the SPX, the SPY, and the Qs. A little bit of a mixed signal here on IWM. We are seeing put side short-term gamma go in, but we're also seeing short-term call gamma go in. And if you remember, just a few days ago, this was a flat line almost up against zero, and now we're starting to see the emergence of calls in here. So across the board, we are seeing bullishness compared to the previous day. Signals are still up and they're growing, so that's good. Deltas, the blue lines are the same on each of the charts. We've got the combo here, we've got the AM settled SPX, and we've got the PM settled SPX. The PM is smaller, tends to trade in sync. These are the zeros of the complex. Think of them as a fulcrum or a balance point, and we are above the balance point across the board. The AM is still very bearish with a downward sloping line, same thing here. A little bit of a tilt up yesterday, but still the AMs are not showing the same bullishness that we're seeing in the market. And for this reason, we are calling for we are stating that this is a bear rally. And just be aware of that it could reverse. This is the mothership. This is about $4.5 trillion in notional value. So we want to pay attention to the AM settled, but certainly take advantage of any short-term move-ups that you can. And the PM settled here is clearly showing some stabilization and a move up, and we're going to continue to watch to see if this turns up. The SPX structure, you are all probably aware we've been bouncing against this 4,000 strike. That's where we have POI and COI. We've got some transitions which have moved up. We've got the zeros that are sitting down here, so we're above where the balance point is. This infers that we're in a regime where the dealers must sell the rips and buy the dips. That's going to dampen volatility across the board, and that is indeed what we've been seeing for the last few days, and it's clearly indicated here when we're above the true gamma and true delta zeros. We change regimes, and that's important. Taking a look at the key levels, the blue line shows us kind of where we're at. You can see we're starting to get an emergence of the green side, which means that we are changing from a regime where the dealers were selling as price fell and buying as price went up. Now they're counter trend to that because of the way the gamma models have shifted, and because of that we are going to see some stabilization. The expected move continues to drop. We've been holding in the 2.5% region, and we continue to see this number come down, especially as the VIX comes down. So for now, just keep in mind the 4,000 strike is a key strike that we want to pay attention to. The PM settles. Note that 25% of the PM is coming off today. We'll talk a little bit more about that here shortly. Net negative gamma here, transition area here. You can see that we do have the JPM short calls that are still dominating the 4,005 strike, and that's important here because that's going to be a little bit of overhead resistance. Note the sea of green across the board in the PM structure, and you'll see here shortly it's mostly that for the overall SPX AM and PM combo structure. The key takeaway that I want everyone to realize here is that we do have this structure in the PMs that is preventing us or giving us some pause as we go up against the 4,000 strike, and you'll see here shortly that we've got to really overcome this 4,005 in order to aggressively move and hold above this area. The 0 DTE, extremely clean transition area today. We're going to watch this. I'm going to put some trades on to take advantage here if we do close in this particular area. The 4,000 strike is the dominant expiry for today. If we get above this, moneyness shifts quite a bit. Remember, cash settled, so there's not as much of an impetus here to monetize, but going into the weekend, you might see that, which would have a slight downward pressure. To the upside though, 40.50 seems to be the upper line for today, so the contributions today from the 0 DTE and the moneyness, if they do roll their profits and move those out, that could continue to see calls being added up and out, which would continue the momentum to the upside. The combo complex, which is the AM and the PM, a lot of noise on the chart here, but I want to bring your eye into this area right here. So here's that JPM short calls that expire at the end of September, still having a material impact on net delta notional. The gamma is relatively unchanged. It's made a little more positive than it was yesterday, but it is still significant. We can still push through this. There's nothing really stopping an $8 billion push through here. One thing though is that this level at the 4,000 strike has grown a tremendous amount since yesterday. Why that's material, these are the adjustments that have to be made, and with that sign change sitting right above it, we've seen this historically be a pausing or an area of liquidity. So we could stall in this area by the end of the day. Note we have COI, call open interest, and put open interest dominant still here, and we also have positive gamma as dominant here. So moneyness changes as we go above that 4,000 strike, and that could embolden people to continue to push calls higher and out in time. To the downside, transition area. We have two transitions that we're watching here. One's dominant, one's less important, and then net negative gamma below 39.10. That's where things get really dicey. Don't think we're going there, but certainly just pay attention to this. The overall structure, huge jump in 4,000 from yesterday. The scale here is bumped up dramatically over the week. We started at a 5,000 maximum gamma level, and you can see that we've gone up quite a bit here. The JPM continues to be dominant, as I was just discussing. We closed here at 39.98, so we're right below the 4,000 strike. Transition is scooting up the chain. Now that's because the chain is moving up, but note the distributions here, right? So we're getting tighter and smaller on distributions. We're extending out. This is normal in an expansion, but just be aware, with no downside protection going in, liquidity down here could be a problem. So with that, let's summarize. So the market model, bullish. Daily change in the wing charts, they're all bullish. They're expanding. IWM remains characteristically weak. It's been a laggard. It continues to be a laggard, but it's improving. Zeros of the complex are moving up with everything. That's bullish. Next target is still same as yesterday, that 4,000, 4,005 takeout. We need to aggressively push up through that 4,005 and close above it. Not expecting that, and so I'm going to play that accordingly, and then downside protection continues to erode. I do think it's problematic, so my counsel would be acquire some insurance when you're up here when you don't need it. So that's it for today. If you like today's content, please come join us at GammaEdge.us. That'll get you into a sign-up page for our Discord. That Discord will get you 14-day free trial, all the tools turned on, a lot of discussion going on, great traders, all experience levels, all different sizes of portfolios, some quite sizable, some at the beginning level. So do not feel intimidated, and would urge everyone to come in. Follow us on Twitter at GammaEdges with an S, and here on YouTube, of course. If you like today's content, smash that like button. Let us know that you like today's content, and we'll do more of it. And of course, follow us so that you get notified next time we post something. With that, make it a great Friday. Hope everybody had a great week. It's been a good week for the Bulls, and look forward to seeing you in the Discord. Take care.